All right, so we want to talk about some benefits to working with the proper professionals, knowing for buyers that there are other options besides A, B, C, and D. There are other options to get you into a home. So Ben, what's the loan program that you want to talk about for the
Thank
buyers?
you for inviting me to discuss this. This is something that I would say that I'm
This is your office.
I'm sorry?
This is your office.
It is my office. But thank you for inviting me to do it with you, though. That I appreciate.
Thank you.
So a program, there are so many programs, right, as you know, loan programs. You have FHA, USDA, conventional, different types of conventional, non-QM, etc., right? And even under the non-QM bucket, there are so many. So the one I want to talk about is something that actually isn't used too much in Long Island, and that is one of the reasons why we have the beautiful American flag in the back, is the VA loan, right, which is exclusively for veterans. Actually, it's not even just for veterans. You can be active duty and use it as long as you're eligible. So the reason why I want to talk about it is because a lot of people think that it's a really tough loan, or it's a bad loan, or it's weak. Either a listing agent or potential buyer/borrower thinks that it's a bad loan, and it's not. In my opinion, the VA loan is the greatest loan in the entire country, okay?
How so?
So yes, that's a great question. So right off the bat is the interest rates on VA loans are incredibly competitive. They're basically around the same as FHA. They're usually identical. So on average, FHA and VA interest rates are anywhere from 0.25% to even as high as 1% lower than conventional. Okay, assuming, of course, everything is the same. So it's good for that reason, but the other benefit, huge benefit actually, is that there is no monthly mortgage insurance on a VA loan.
Could you say that one more time?
Yes, no monthly mortgage insurance on a VA loan. And you can put as little as nothing down. So technically, it's not even as little, you could just put nothing down. So when you take that into consideration compared to a conventional loan, it's much, much cheaper for the veteran. There's only one catch, is that the VA has a loan guarantee fee. The guarantee fee is basically a fee that's paid to the Department of Veteran Affairs, right? But the amount varies. So if the veteran or active duty member is technically disabled, then it's 0. But it can go as high as like 3.3% or a crazy high number. So that fee is financed into the loan. Right, so let's say hypothetically it's a $500,000 loan and the guarantee fee is 2%, which would be $10,000. That would just be added to the loan amount of the loan. So it's not like you have to pay it at closing. Some people try to or want to, but I don't think it's really necessary. But
it really depends on the person's situation, whatever their situation is.
Yeah, and I would say 9 times out of 10, the VA loan is better than conventional, right, or even FHA. So the thing is like a lot of veterans don't end up taking the loan because they end up working with a lender that isn't very familiar with it. So they end up putting them into conventional or into another bucket, which actually doesn't make sense because it's easier to qualify for a VA loan in comparison to any other loan. The debt-to-income ratio limits are way higher. So for conventional, they're typically around 49.9%. You've got some fluctuations there depending on the type. FHA is 46.9% to 56.9% in the back. On VA loans, I've closed VA loans with a debt-to-income ratio as high as 80%. Right, so you can qualify with very, very high amount. Now, of course, you have to be comfortable with what the payment is. Mm-hmm. It's another story, but you can get it done. Like the circumstances where that happens, it's like, let's say the veteran wants to go on the loan by themselves, but they have someone else that's going to help them with income. Maybe it's a
spouse,
significant other, whatever the case may be. Right, so they're cool with the payment because they got it from other places. So yeah, it's an absolutely phenomenal loan. And in terms of the process of the loan, it's really, really easy to do. The only thing that requires like anything from the outside, you could say, is the appraisal. Okay, so for instance, any other type of loan, you have your own appraisal management company that you order through. So this is the part where agents don't love it, right? However, it's not nearly as bad as you think. So in order to order an appraisal with a VA loan, you have to do it through the VA. Right, you got to log onto their portal and do it. So you don't have appraisal control or anything like that, but all the basics are there. Let's say hypothetically the appraisal comes in short. You can rebut the appraisal. You can argue that, okay, you missed these comps, these
Here's the comps.
Yeah, and they have to reply within a certain amount of time. So it's not like, if it doesn't come in, they're unreasonable. They're reasonable, but the priority is to protect the borrowers, to protect the veteran. So that's easy, but the turnaround time is like the same as any other loan.
And that was going to be my next question. How long does it take the whole process from start to finish?
I would
Typically.
say, just as fast for the appraisal or VA loan in general.
The whole VA loan.
It's a good question. I've closed VA loans in 7 days.
If everything is basically...
It's basically the same. It's the same as any other type of loan. It's just, that one thing that you can't control. But look, you can make the same argument with anything else, right? Like you can't control how responsive your attorney is, or the title company that your attorney selects, or your mortgage lender. If your mortgage lender is unresponsive and they suck, for lack of a better word.
And the other agent on the other side is representing the buyer.
Yes, not you, the other one.
Yeah, not me.
That's right. That would never happen. So... For those reasons, I think it's literally the best loan in the country. And here's another very interesting. I mean, I find this interesting because I'm a loan officer, but you may not find this that interesting.
Let's let the audience decide.
Yeah. So the VA loan, from a lending perspective, has the lowest denial rate compared to any other loan.
Say that one more time.
Yeah. So the VA loan has the lowest denial rate compared to any other loan. So what does that actually mean? Okay, if I send, or let's say the average lender, because I'm not average, if the average lender sends a loan into the bank, or let's say a conventional loan, there is an 86% chance that it will close. Okay, same thing with FHA. The difference between FHA and conventional is nominal, by the way. They get declined. Conventional has like a 0.3% lead on FHA. It's basically the same. Now, VA loans get passed and closed through underwriting like 93% of the time. So if you, as a listing agent, want to take the best deal humanly possible,
VA
of course,
might be a better option.
Exactly. Of course, there are other things to consider. The loan officer needs to know what they're doing and how to process everything.
You have to have a good feedback from everything.
So, but if all is equal, statistically speaking, you have a higher chance of closing a VA loan than any other type of loan. So for that reason, that's another one, like from the agents, that they have no idea about this. To be fair, I didn't know about this like until maybe a year ago, and I was shocked. And it's like, it doesn't make sense, because listing agents are always like, oh, VA is tough. The appraisals are tough. They're going to require all this and all this. And it's just regular stuff. It's just regular stuff. It's not unreasonable for a veteran to do a home inspection. It's not unreasonable to, for the appraiser to require that the house is move-in ready. Doesn't mean it needs to be like fresh cosmetics and all that. It's just, it can't be
livable. It has to be
livable.
livable.
Exactly. Okay. So these are like basic requirements. So, on that subject, the VA loan isn't a good loan if you're looking to buy a fixer-upper. Yeah. Unless the VA has a renovation loan like FHA and conventional do. So that's also a good option.
So that's another thing basically we could talk about also, about combining those two together.
Combining what together?
Like if a person who's got a VA loan or qualified for a VA loan and they want to buy a home that basically requires a lot of fixing.
Yeah. So it's good for that. The only problem is, I probably shouldn't have brought it up. The only problem is
this is why we're here. We want to educate the audience.
Well, I don't know any lenders. So I'm a broker, meaning I can send my loans to multiple banks. We have over 90, I think, at this point. Is that there aren't any lenders that I'm aware of that do the construction loan in New York. Okay. Out of New York, there are more, but in New York, they kind of stay away from it. So it's not a great option. But, again, the beautiful thing about a VA loan is that you can get a concession to cover basically all of your closing costs, or close to all of them. And then on top of it, you do no money down. Like, you can technically, and this is another thing I'm going to talk about actually, you can technically like go into a VA loan or use a VA loan to purchase a home and shell out almost no money besides like an appraisal, inspection, insurance is what I meant to say. So the issue that I come into when this happens, when we get veterans that are putting no money down or little money down, is contract signing and EMD, right? Because then they're like, oh, I thought I didn't have to put any money down, and
sometimes it's just paperwork that it's really on paper you're doing stuff.
Right, but they still want to check, right? So if you're a veteran looking to do 0% down, keep in mind you're going to have to put some money down on contract. That money can be refunded to you at closing. It could go to your closing costs. That's up to you, but you have to put some money down. I don't know
another thing, I'm sorry to cut you off, is sometimes on the seller side, sellers are uneasy. It really comes to the agent how they educate their sellers, basically, because some sellers feel, all right, this person's not putting any skin in the game. What if they were to walk away, basically, as we're dealing with them, and I'm missing opportunities from other buyers? So on the seller side, that's a little the hang up, and that's why it's very important to speak to loan officers who can educate agents, basically, so when they're dealing with their sellers, especially if it's a loan officer like this gentleman right here, who's well-versed on this, and that way, once you relieve the stress from the agent, they can relieve the stress from the seller, and the seller feels more comfortable. All right, I can see why this might be the best loan for me in my situation right now.
Exactly. And it all comes down to education, right? Yeah. And to be fair, like, I don't expect realtors to know about this because, candidly, 99% of loan officers don't even know this. So why would an agent? But I think as professionals, it's on us to learn about these things so we can better serve our community.
Exactly.
So, the issue is, I guess some people don't know where to look, but,
And that's the whole purpose of this video.
That's right. We're here to educate.
Educate. So basically, when you do have questions like this, which loan might be best fit for me? Hey, I might actually qualify for this.
Yeah, and it's a great loan. Honestly, when I say it's my favorite loan and it's the best loan in the country, I'm not just saying that. It legitimately is. How can you beat, no money down, the best interest rates, no mortgage insurance? You can't beat it.
All right, question for you. Now, can you use a VA loan basically for an investment, or is strictly basically to live in only?
As we mentioned, that it has to be for primary residence only. However, you can buy anything from a single family up to a 4-family for a VA loan. So as long as you are living or you plan to live in one of the units, you can use it. Now, the VA does have a rule is that they will not use or they will not allow the veteran to use rental income to qualify for the property unless they have a previous history of owning and renting property, right? So for first-time home buyers, they see this and they're like, that's going to be tough. Now, there is a way around it. So not a lot of banks allow this. I've found that 95% of lenders will not allow this, but 5% will. Is that if
And you're in the 5%?
Right, exactly. So if the veteran hires a property management company, the VA will allow them to use the rental income to help them qualify. I mean, they'll minus like the management fees and stuff, but
that little nugget right there, basically, I think is really wow. Didn't even think about that. Get a property manager.
Crazy.
It makes sense.
Yeah, it does make sense. I think it is a bit of a crazy requirement that it's required to begin with, but like maybe if they had them take a class on being a landlord, right? So a lot of like Fannie Mae and Freddie Mac have these like first-time homebuyer programs, and they require that. Like you got to go through this class, and you can get the program. So anyway, the VA is not going to listen to me, or maybe they will.
You never know.
I will contact them later today.
Well, maybe they'll see this and they might change a few things.
I think they will. I think we'll throw a couple mil behind these videos, and
it might be called Ben's Law. Who knows?
Yes. Yes, let the British decide American law. Great idea.
still too soon. But anyway.
Yeah. They've sent me here as a mole. I'm a sleeper agent just waiting to wake up and take over the government. Imagine. Yeah, it's not going to happen. All right.
He's converting me. I'm drinking tea right now. So,
what else would you like to learn or know about the VA loan? What do you?
I think basically we cover a lot of stuff right now. I think the number one thing I want them to understand is pretty much if they have any questions, how can they reach you?
I like that. If you have any questions about VA loans or mortgages in general, you can call me or text me. My cell is 917-670-7878, or just DM me on Instagram, BLavMTG.
And I guess that's pretty much it. I'm Evantz Saint-Gerard, your real estate agent here in Queens, Long Island, Brooklyn, the Bronx. You have real estate questions, that's what I'm here for. That's what this gentleman's here for, to answer any of your questions. We can't answer your questions unless you talk to us. So it's really important. You pick up that phone, start the conversation. Let's have a dialogue, and let's see if we can help you. If it's not for you, maybe it's for a friend or family member. They might have scenarios. Let's have the conversation, and let's see what we can do. Other than that, I think you got the last words.
Yep. Thank you again. This was awesome, and hit us up.
God bless America.
I like it.
All right, so I know that you're buying a house, you're selling a house, and you hear a lot of terms, and sometimes you're confused. Well, that's what we're here to clear them out. Ben, we're going to go rapid fire. I got some questions. All right, first one is interest rate. It's very topical.
Okay, interest rate. So it's basically a reflection of what you're paying, right? So obviously, the higher the interest rate, the higher your payment's going to be. The lower interest rate, the lower your payment's going to be. However, there are other factors to consider, like mortgage insurance, home insurance, property taxes. So much goes into a payment. My advice is to not obsess with the interest rate because you cannot control it. The market controls the rate. Focus on the payment and that you're comfortable with every other factor that goes into it.
And the next one we have is loan to value, LTV.
LTV, very simple. It's just a reflection of how much money you're putting down. So for instance, if someone says to you, you have to take this loan at 90% LTV, all that means is that you're putting 10% as a down payment. So the lower the LTV, the higher the down payment required.
Next one is debt to income ratio.
My favorite. So debt to income ratio, AKA DTI. So what it basically is, it's a limit to what you can qualify for. So essentially it's a ratio. So for instance, debt to income ratio is your gross income compared to the potential housing expense you're about to take on. This is actually called the front end ratio. Now you have the back end ratio, which is the same thing, gross income versus housing expense, but it also includes other things like child support, alimony, taxes that you owe, credit card payments, car loans, things of that nature.
All right, so couple of simple ones basically are closing costs.
Closing costs. This is actually a really good one because when people say, like, what are the closing costs, they think that we, the lender, determines what all those costs are. So as the saying goes, don't shoot the messenger. For some reason, what just went into my head was that... remember the movie 300? This is Sparta.
This is Sparta.
Such a poor guy. Yeah, okay. So closing costs include so many things. Now, it includes the fees from the lender, the mortgage company for sure, but it also includes like your attorney fee, your appraisal fee, your title fees as well, mortgage tax that goes to the state, your escrow account or formulating your escrow account. Technically, it doesn't count as a closing cost. It's more of like a prepaid type item, but still, it's in there, and that's if you do decide to escrow. So closing costs is something that you have to be familiar with, especially here in New York. We have the highest closing costs in the entire country, or at least top 5. So there are states where closing costs aren't zero, but really, really small. So just something to keep in mind and to be aware of.
And you kind of mentioned this one already, escrow.
Escrow. Okay, so you got 2 types of escrow, really. You've got like the escrow account that attorneys will talk about when you put the money down, but the escrow that we're referring to today is basically, it's not required on every loan, by the way, but it's basically an account that you create at closing. It's usually, again, part of your closing costs and your prepaid items. So this way the lender can pay things for you without you having to do them, things like your property taxes and your home insurance. So let's say hypothetically, you get to closing. For the escrow, they're saying you got to bring $5,000 to closing, and this way, as the year progresses, the lender will take money out of that $5,000 escrow account and use it to pay your home insurance for you and your property taxes for you, so you don't have to do it. Now, keep in mind, if you ever refinance or you pay off your loan, you sell your home, whatever is remaining in your escrow accounts will be refunded to you.
Okay. So we got 2. I'm going to give you fixed rate mortgage and adjustable rate mortgage.
Okay, so let's do fixed rate because that's easy. If it's a fixed rate, it means that the interest rate remains the same. Okay, so it won't go up, it won't go down, and your payment, again, as far as your principal and interest goes, will remain the same. It doesn't mean that your home insurance won't change or your property taxes won't change. We can't control that. Adjustable rate is exactly what it sounds like, an ARM, adjustable rate loan. It means that after a certain amount of time, that the rate will adjust. Now, these ARMs these days, especially after the 2008 financial crisis, these loans have caps to how high the rates can go when they are adjusted. So you have some protection there. And the terms are usually 3, 5, 7, and 10-year ARMs. Sometimes the ARMs adjust twice in a year. Some only adjust once in a year. It depends on the lender, but that's usually more common right now that it's twice a year.
I guess there's a lot of stuff. We don't expect you to remember all this stuff. That's what we're here for. So if you have any questions, something doesn't make sense to you, always talk to your professionals. Besides dancing, we do not dance around the issues. We're here to talk to you, so we're here to educate you. You have any questions about anything, scenarios you don't understand, give us a call. I'm Evantz Saint-Gerard. My number is 917-975-5985. I am your real estate here in Queens, Long Island, Brooklyn, the Bronx. And you are?
Ben Lavender. There's no music playing. I was just vibing off this little tangent you just went on because it was so melodic. My name is Ben Lavender, also known as the British Mortgage Broker. You can call me, text me, DM me, whatever makes you happy.
That's all we got.
Boom.